Technical analysis for beginners. All right, so technical analysis is kind of the study of supply and demand in the market. It looks exactly how the market prices move very literally. So using this kind of analysis helps find the time that you want to enter a trade and exit the trade, and you can look at the volume, the levels of supply, and the levels of demand that there are. So I'm going to be looking at two indicators which are really simple for beginners to learn. They're the moving averages and also the relative strength index. The RSI tells you the overall mood in the stock price and is one of my favorite indicators, but also keep in mind that using multiple indicators is much better than using a single one. So with technical analysis and fundamental analysis combined, they both take advantage of how literally the stock market is moved and the reasons behind it. So using both of these and knowing both of them will really help you with all of your trades, especially since finding an entering position, it can be usually difficult without any previous technical analysis on it. So first we have moving averages, and moving averages are used because they kind of smooth out the intraday price fluctuations into a steady slope. And this is much easier to look at because it's an average price over a time period. So I'm going to go over simple moving averages because those are the averages over that time period. But also keep in mind that these longer time period moving averages have a lag. And this is because it's over a large time period. And so the most recent prices just don't have much of an effect because they're not part of the longer period as much as the other prices. So consider that a huge price movement in one day would only be 1/200th of the 200-day simple moving average. But there is a way to get past the lag with exponential moving averages, but I'm just going to keep it with simple moving averages as a beginner technical. So moving averages are really used to identify trends in price, and they're also well used to find support and resistance levels, which I'm going to be going over next. With an average slope of the moving average, you can see where the price might be going. Of course, it's hard to see. It could move quickly in a day, but since it's a moving average over a longer time period, it'll be much smoother. So one of the things you can look for right away is the death cross, and it's what I look for a lot. It's when the 50-day simple moving average crosses below the 200-day simple moving average, and it's showing a huge downward trend, usually because of a single drop in price over one day that is very large. Now, using moving averages, you can kind of see where a stock hangs out. So I like using the 200-day moving average to see where I might want to enter a position and where I might be trading at a discount. Now I'm going to go into support and resistance. So how I like to think about it, support is kind of the volume of orders. So let's use an example of Apple. Apple is trading at $145, and let's say a lot of people want to buy it at $140 because they feel like that's a better price to get it at. So they put in buy orders for $140. Now $140 is the support level. Let's say a few weeks later, a large sell-off of Apple occurs, and there's a lot of sellers wanting to sell Apple. Now these sellers will run into the huge amount of buyers that there are. So if $140 is really a true support level, well, then there'll be more buy orders at $140, and so the stock price will remain at that price because there's still people buying it at that. And for resistance, it's the opposite. So if everyone wants to get out, sell Apple at $150, well, then there'll be a large volume of sell orders there. So when people come to buy and there are not enough buyers for the large amount of sell orders, well, then there will be a sell orders at $150 left over, and so the stock price will stay at that level and not go higher because people are still selling at $150. And so that's just how I like to look at it. I like to look at support and resistance as reservoirs of volume for trades. Now I'm going to go into the last technical indicator, the RSI, the relative strength index, and it's one indicator alone, but it is much better to use combined with other indicators. And I want you to keep that into mind because using one indicator is not as beneficial as using many, and you want to use many to see the overall trend in price. So the RSI calculates the general volume towards buying and selling in a scale of 0 to 100%. So it makes the RSI a momentum calculator. An RSI below 30% means it's oversold. So 70% of the orders are sell and only 30% of the orders are buy. Above 70% means overbought. If the RSI is above 70, means 30% of volume is selling orders and 70% of orders are buying. And this is how I look at it. So, when you see a stock price that's at 20% RSI, well, you know that most people are selling it. And if everyone sells it, well, there's only more people to buy it. So above or below these levels, the 30% and the 70% usually cause the stock price and prime it for a correction back to around the 40 and 60% area. But it can stay below those, like below 30% for a very long period of time, and you just don't know when the correction will happen. The time frame usually with RSI and what I use is the 14 days, which is the 14 days of trading. And there are shorter time periods for 7 days, and there are longer. So, it can be used to gauge how well a stock is performing in terms of volume and how many people are buying it and how many people are selling it. And this can show the overall trend in the price, which is why it makes the RSI a technical indicator of momentum. Technical indicators give exact insight to how the stock market literally moves, with the amounts of buy orders and the massive amounts of sell orders. It's kind of an encyclopedia to the supply and demand levels. I mean, it's showing literally how the price goes down depending on the supply and the demand of it. So, make sure you use these technical indicators, and it will back up your fundamental analysis. And so this really, using technical indicators, it optimizes your gains just by picking the best price to buy it at, as well as the best price to sell it at. Make sure you also use many indicators rather than one. I use the simple moving average for 200 days and the RSI. I also use a few others, which is for another video, because I just wanted to go over these beginner technicals. Use the RSI, use the moving averages. That was the video. I hope you like it. Make sure you hit the like button and also subscribe to just get my videos really quick. This Sunday I'm having an analysis. I'm doing analysis on AMD, so make sure to check that out.